So, hi guys, very good evening, all of you. So, we are going to start our free session on working capital management for the benefit of CA intermediate students who are writing exam in this November. Someone started writing on my board, so let me clear that first. Very good evening, Ma. Priyadarshini is saying good evening, everybody. Very good evening. So, I hope your preparation is going on great. So as you see, I started sharing my screen. On the screen, you can see our beautiful Institute of Chartered Accountants of India's Board of Studies. So I'm going to Board of Studies. In that, I'll go to CA Intermediate to open working capital management. So, study material. In that, we'll go to Intermediate. In that, we'll go to Financial Management. In that, we go to Section A, which is FM. So which chapter we are in? 10th chapter, Management of Working Capital. Okay. So guys, working capital is one of the most important areas for your examination. And also, this is a very traditional topic, very conventional topic. So I remember 25 years back in CA final in financial management paper, those days they used to call it MAFA. The primary, there are two major topics. One is working capital management and another one is capital budgeting. Then in the year 2003, ICA shifted financial management, that portion, whatever is there in final, to CA intermediate. And then they started, something relating to stock market, something relating to a higher level, international finance and all, they introduced. So that time it is, named as strategic financial management. So if you look at the journey, in CA intermediate, we have FM. In CA final, we have SFM, strategic financial management. So you do any MBA, you do any MCOM, this particular area, management of working capital, is very important area. For CA intermediate students, after introducing this dividend decisions and risk analysis in capital budgeting, the weightage of working capital management is reduced. The weightage of working capital management is reduced. Previously, it was like maybe, maybe 20%, 25%. Now it is maybe 10%, 12%. Okay. So I can say that if you are thorough with this working capital management, on an average, I cannot accurately tell you because ICA never follows a pattern. ICA, surprises the students all the time. But I can tell you 10 to 12 marks in financial management is assured. If you are thorough with working capital management, 10 to 12 marks are in your pocket. Okay, that is the good news. Bad news for you is there are so many subtopics in this financial management. There are so many subtopics. Okay, so let me take you inside the chapter, then you will realize, see, first one is estimation of working capital here, this part. Then working capital cycle, operating cycle, which is very easy. Inventory management, which is nothing but your costing. Materials topic is there. No, in that material topics, you remember, you'll calculate material levels, EOQ. Inventory management is similar. That is the reason many financial management lecturers do not even touch this inventory management in FM, because you have already completed that in costing. And in costing, whatever material topics, you have studied the concepts exhaustively. Here in inventory management, very minute part only will be there. That is nothing but your EOQ, that William J. Baumal's model of inventory management, square root of 2A O divided by C, that only will be there here. So it's not a big deal. So you can simply ignore this. Of course, two problems are there in ICI study material. You can do the two problems, but you don't really need to worry about this inventory management. Payables management also is not that important, just theory. And, it is never tested in the exams as well. Financing working capital is also theory. Maybe 1-2 times they ask a theory question, but not a great one. But cash management is important. Cash management models, William J. Baumal model is one model and Miller-Orr model is another model. These two models are important. William J. Baumal model for problems, Miller-Orr model only for theory. That is important for exams. That is about cash management. And there are cash budgets, two types of cash budgets. One is cash flow statement, which is never discussed in financial management, which is a part of your accounts. In group 1 accounting, you have cash flow in unit chapter 4, unit 1. Chapter 4, unit 2. Chapter 4 has 2 units in group 1 accounting. They are financial statements of companies and cash flow statement. So you learn cash flow statement there. That is also a type of cash budget, but we call that a long-term cash budget. In financial management, you have short-term cash budgets, for example, monthly. So you'll prepare cash budget for 3 months, particulars, and then 3-month columns like April, May, June, or sometimes it could be 6 months, something like that will be there. But that is also not frequently tested. Quite often they ask, I do not say quite often they ask, but maybe if you take 10 attempts, maybe 1 attempt or 2 attempts, they'll give that cash budget. Okay, then comes one of the most important area, debtors management or management of accounts receivable, we call, which also includes factoring, which is one of the nightmares for the students. Students do not understand, Pavan sir, what is this factoring, Pavan sir? What are these equations? How they are calculating? I'm unable to understand. Don't worry, I will take you through. It is one of the easiest concepts. People feel it is difficult because they do not understand the essence of it. But my dear friend, once you understand the concept, you can play football with numbers. So basically, though there are so many modules, there are, I think, 6 parts even in ICI study material. If you look at it, there are 6 parts in ICI study material. Oh my God. Unit 1, introduction, where we calculate working capital using a traditional table model and also operating cycle model. These two. Primarily, we'll be discussing these two today. Then we have treasury and cash management, where, this cash management models and cash budgets will be there. Management of inventory, you can ignore it. If you spend half an hour of time, you can easily understand the concepts that 2 problems are there, could be small problems, do that. Then management of receivables, very important area. Payables, not that important, neither theory is important, nor problems are there. Previously, I remember maybe 10 years, 15 years back, there is something called float management, which is not there now. Okay, so don't worry about it. Financing of working capital is just theory. So basically, we are dealing with the unit 1, we are dealing with the unit 2, we are dealing with unit 6, which are important and practical problems are involved, in a high level in this 3 modules. Remaining 3 are theory. So today we are starting with introduction to working capital. Okay, shall we move ahead? Can they test questions on payable management this time, as it was not asked before? Boss, I am not an astrologer, I am a teacher. Okay. So auditors can never answer this kind of questions. Okay, see, to the best of my knowledge and belief, with the information given in this kind of quotations also, I cannot answer. So let us expect that ICI will not ask. If they ask, theory 2 pages. Okay, if you are that skeptical, if you are that conservative, no, Pavan sir, I do not want to take any risk, I want to read. Okay, read the 2 papers. Okay, but not me in the revision class. See, whether it is a free class or it is a paid class, whether it is for ICA or any private institute, or it is, I am doing it on my own. I always explain the concept. Okay, but you go to any faculty, 100% of, especially ICA syllabus, 100% of syllabus can never be covered. So if you're asking, shall I do creditors management? As a friend, I can say that is, if when you are doing category A, category B, category C, ABC analysis, that comes in category D or E or F or G. Okay. Then if you're asking me, shall I read that? Read. For the sake of knowledge, read if you have time. That's all. So here, some introduction is given, which I am sure you might have studied in your 11th class or 12th class. What is working capital? Working capital is the difference between current assets and current liabilities. What are current assets? What are current liabilities? That we are not going to discuss here. Okay, these are, LKG level things. I assume that you understand what is a current asset, what is a current liability. If you do not understand what is current asset, what is current liability, I suggest you, from where you have to study current asset, current liability, can you tell me at least? Guys, any idea from where you need to read what is a current asset, what is a current liability? I can challenge, no one will tell correct answer. +2 textbook, no. Accounting standards, no. 11th standard, no. Idiots. Schedule 3 in CA Intermediate. Group 1, Accounting, Chapter 4, there is one annexure, Schedule 3. There they have given you what is a non-current asset, what is a current asset, what is a non-current liability, what is a current liability. A non-current asset is an asset which is not a current asset. A current asset is an asset. They have given you 4 bullet points. You read that 4 bullet points and tell me tomorrow. Previously, I'm not speaking about FM, I'm speaking in general. Previously, the classification of asset into a current asset or a fixed asset was made based on a criteria called 12 months. Any asset that can be converted into cash within a period of one accounting year or 12 months is considered to be a current asset, which is not a current asset is considered to be a fixed asset. You understand? But there is a change, when you have, when we started harmonizing our accounting practices with IFRS, then ICA, Ministry of Company Affairs, MCA, Ministry of Company Affairs, they changed the definition of current asset. Now, asset is classified into current asset and non-current asset based on a concept called operating cycle. So, an asset which can be converted into cash within an operating cycle is said to be a current asset. If it is not convertible into cash within one operating cycle, say for example, your operating cycle is 9 months. Pavan sir, I will be able to generate cash out of this asset. I liquidate this asset, I'll sell this asset, and I'll be able to get cash only after 11 months, Pavan sir. Then it is a non-current asset because your operating cycle is only 9 months. But a company can still follow 12-month criteria, and especially some industries like you take real estate, banking, finance sector, for them, this operating cycle concept is not applicable as it is. For example, if you look at a banker, for example, ICICI Bank, they have given one loan to a person, Mr. A, which is repayable in 30 years. Then Mr. A technically is your debtor, isn't it? You have given a loan means that guy is your debtor, but the debtor will not give you cash within one operating cycle or within 12 months. No. So he will repay in 30 years. So they have, a different criteria. They cannot follow operating cycle. But without loss of generality, in general, if we talk current assets and non-current assets, current liabilities and non-current liabilities now are based on operating cycle. Okay, so shall we move further? They have given some examples. Okay, what are current assets? Inventory, oh my god, raw material, work in progress, finished goods, receivables like trade receivables, bills receivable, cash equivalents, prepaid expenses. Oh my god, they are saying all these are current assets. Dear ICI, you surprised us. Seriously? All these are current assets. Hey, hello, all of you. Are you surprised with this list of current assets? Or do you know that these are current assets? Oh, hello. Do you know these are current assets or no? Very good. So is there any lag now? Are you able to hear me? My audio, video, is everything fine now? Very good. Okay. So these are current assets. Then they have given some examples for current liabilities also. Now here, it is expected to be settled in normal operating cycle. Oh my God. Payables, trade payables, bills payable, outstanding expenses, all these things, these are current liabilities. Then they told you what is working capital management. Simple. Working capital management, you can give many types of definitions. You can explain the process of working capital management, but remember one thing. Working capital management is balancing between two things. Working capital management is balancing between two things. Can anyone tell what are the two factors we are trying to balance? Hello, can anyone tell what are the two factors we are speaking here? Ta-da. Ta-da, ta-da, ta-da. I am waiting for your answer. Opportunity cost, current assets, current liabilities. Working capital is balancing two things. What are they? Cash inflows and outflows. Cash, receivables and payables. No. Financial position of the organization. Amma, ayya, appa, abba, amma, Okay. Don't torture me with your answers. I'll tell you. Hello. Wait. The flood of answers that are coming, idiots. Working capital, write down. Working capital management is balancing between profitability and liquidity. Manish Arvind is saying liquidity. Excellent. Correct. Working capital management is the process of balancing between profitability and liquidity. How? We'll see. Question number 1 is based on that only. Question number 1 is based on that only. We'll see now. Okay. Now they have given classification of working capital based on the concept or based on the value: gross working capital, net working capital. Gross working capital, net working capital. What is gross working capital? Simple. Sum of current assets. What is gross working capital? Gross working capital is equal to sum of, that means total current assets. What is net working capital? Net working capital is current assets minus current liabilities. That's all. So if you add current assets, it is gross working capital. If you subtract current liabilities from it, it is net working capital. So based on the concept or value, working capital is of two types: gross, net. Okay. Based on the nature or permanency, there are two types of working capital. One is permanent or fixed working capital. Second one is temporary or variable working capital. Ta-dan, 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 ta-dan. Permanent or fixed working capital, temporary or variable working capital. Okay. So what is a fixed working capital? Working capital which is to be maintained at all the points of time, throughout the year, throughout the business cycle. You have to maintain that working capital to maintain minimum level of activity. Pavan sir, my minimum level of activity is 20,000 units, Pavan sir. But in season, sometimes I might be able to sell 40,000, 50,000 also. So your basic minimum level of activity is there, no? So the amount of working capital required to maintain that minimum level of activity is called fixed working capital. Over and above fixed working capital, whatever the balance working capital is to be maintained, that is called temporary or variable or fluctuating working capital. So if you look at this diagram, you'll understand. Okay, so permanent is in the nature of fixed. Sometimes that also might increase, like, you know, how you see in the second diagram. So in the first diagram, you can see permanent working capital is like, you know, fixed cost that is horizontal to your x-axis. That means all the time you'll have to maintain this. And over and above permanent capital, there will be some temporary working capital. All these are theoretical concepts. Okay. Then they have given what is the importance of maintaining working capital, all that blah, blah, blah. you can read the theory, because we are in, the process of revision. I cannot spend that much of time. If I spend that much of time, no, there are only 5 or 6 questions in this ICI module. I want to cover all the questions. Okay, so let us not waste time on unnecessary things. The significance of working capital, theory point of view, it is very important, but no one will ask you in the exam. So you read what is the importance of working capital. If adequate working capital is maintained, what will happen? If inadequate working capital is maintained, what will happen? How working capital will impact the goodwill of a business? What are the constituents of working capital? All these you can read in the theory. Now we are straight going to working capital. Now see, liquidity and profit. Oh my God. Now one general knowledge question. How many decisions are involved when you are reading, when you are studying financial management? How many decisions you will come across? What are they? Everybody is saying 3. What are they? Can you tell me what are they? Investment decision, operating decisions are re rubber manda. Who's telling operating decisions? Financing decisions, investing decisions, dividend decisions. Okay, now listen. Working capital is a hybrid area. Working capital is a hybrid area. If you look at, say, for example, capital budgeting is pure investment decisions. Then if you are calculating cost of capital, or when you are speaking about leverage analysis or capital structure theories or maximizing EPS and all, you're speaking only about financing decisions. But when you are dealing with working capital, my dear friend, it involves both. Working capital management covers both financing areas and investing areas. Why? Financing deals with, from where I have to bring this working capital. Now, you cannot bring working capital from outside, like in terms of loan, because majority of the working capital required is met through suppliers and current liabilities. Oh my God. That means inside working capital management itself, source is there. You understand? So if procurement decision, no, Pavitra, procurement decision is not a decision in financial management, like how you speak, how you learn in the objective and scope of financial management. We deal with 3 financial decisions. 3 financial decisions are investing, financing, dividend. Okay, you can have 1000 decisions outside these 3, but basically financial management deals with the 2 aspects, 3 decisions. What are the 2 aspects? Can anyone tell me what are the 2 aspects? In chapter 1, you might have studied financial management deals with 2 basic aspects. One is mobilization of resources, utilization of resources. 3 decisions. What are these 3 decisions? Dividend decisions, investing decisions, financing decisions. So financial management deals with both investing and financing. Working capital management deals with both investing and financing decisions. As I told you earlier, working capital is balancing between liquidity and profitability. Now let us understand what is this liquidity and profitability. Okay, so now can you see there are 3 approaches here? Aggressive approach towards working capital, moderate approach, conservative approach. Can you see these 3 approaches? So we'll discuss in detail. Okay, so look at question number 1. See, we'll come back to this chart after question number 1, or even if I do not come back to this chart, you'll understand that in question number 1. Okay, this one, put a star mark. Important question. Aishwarya, can you unmute your call?
Hi, sir.
Hi, Aishwarya. How are you?
Fine, sir.
Good. Read question number 1. After reading, mute your call.
Okay, sir. Sure. A firm has the following data for the year ending 31st March 2021. Sales 1 lakh at rupees 20 lakhs. Earnings before interest and tax 2 lakhs. Fixed assets 5 lakhs. The three possible current assets holding of the firm are 5 lakhs, 4 lakhs, and 3 lakhs. It is assumed that fixed assets level is constant and profits do not vary with current assets level. Analyze the effect of the three alternative current assets policies.
So simple. If I'm holding 5 lakh rupees worth current assets in my business, I am following a liberal policy. That means I'm holding more cash. I'm holding more current assets. If I am holding only 4 lakh rupees, see, for the time being, do one thing. Okay, for the time being, do one thing. Imagine this current assets is cash. Imagine if I'm holding more cash, I will have more liquidity, more working capital. More current assets means more working capital. More working capital means more liquidity. So basically, liquidity is my ability of repaying bills. So how much of cash I have in my pocket? So if I have 5 lakhs, in my pocket, don't you think my ability of paying my suppliers and bills is high than when compared to holding 4 lakhs or when compared to holding 3 lakhs? So when I'm holding 5 lakhs worth of working capital, 5 lakhs worth of current assets, don't you think my liquidity is high? Guys, are you following me? So here I'm writing particulars. Case 1, case 2, case 3. Case 1, case 2, case 3. Okay, so in case 1, current assets 5 lakhs, 4 lakhs, 3 lakhs. So guys, can I say from liquidity point of view, here company will have high liquidity, here company will have medium or normal liquidity, here company will have low liquidity. This you understand, all of you? If you understand, type yes in the chat box. Very good. Very good. Now look at the profitability angle. Look at the profitability angle. Okay. So the company sales is 20 lakhs. Very good. The company fixed assets are 5 lakhs. Very good. The company's EBIT, operating profit, is 2 lakhs. That is what given in the question. So here, let me write fixed assets. Fixed assets are not changing. It is always 5 lakhs. Okay. Now can I say total assets is fixed assets and current assets? All of you understand this? Total assets is fixed assets and current assets. Now let us calculate return on investment. How do you calculate return on investment? EBIT divided by assets. Total assets into 100. EBIT kahan hai? It is given in the question. 2 lakhs. EBIT 2 lakhs. In all the situations, EBIT 2 lakhs, because they said based on how much of current assets you are carrying, profits will not change. That is what is given in the question. So EBIT is always 2 lakhs. Can you calculate return on investment? And tell me, I am very poor in mathematics. My small mind cannot calculate these ratios, big ratios. I cannot. So I am depending on you. So can you please help me by calculating what is the return on investment in case 1, case 2, case 3? Hello. I asked a question. I'm waiting for answer. First 20%, Bino said, excellent. Sahira is saying 20, 22.5, 25, excellent. Superb, yeah. So first one is 20%. Second one is 22%. Third one is 25%. Okay, now tell me profitability. Is this low profitability or high profitability? Obviously, look at the number, low profitability. This is medium profitability. This is high profitability. So can I say liquidity and profitability are inversely related? Oh my God. So if my liquidity is high, profitability is low. If my liquidity is low, profitability is high. You understand? So which is the best option? Obviously, moderate option is the best option. Because here liquidity is medium, profitability is also medium. You understand? This is what we call balancing between liquidity and profitability. So if liquidity is low, profitability is high. If profitability is low, liquidity is high. Putting both of them in a balance is called working capital management. So obviously, Pavan sir, why are you calling this situation 3 as aggressive situation, Pavan sir? Simple. Having less money in pocket and doing more business amounts to over trading. Many businesses collapse because of this. So you have 3 lakhs worth, working capital in your hand, and you're doing more business than what you are supposed to do. It is called under capitalization and over trading. You're very aggressive. That will hit you, but you might enjoy saying, Pavan sir, you know what? I'm getting more profits. Yes, you are getting more profits, but my dear friend, remember, you are taking too much of risk. In business, you should not take that much of risk. It is something like, buying shares in stock market without having capital, which is possible. Short trading, or, you can go for derivatives, you can go for this Forex or currency markets. And then what they do, they will have 1 lakh capital, but they will take a position worth 5 lakhs, which is possible. You might end up with profits also, but if there is any adversity, it will slap you and you lose whole money. So that is the reason this is called too much of the risk. So what is the conclusion? The conclusion is step 1. Conclusion is step 1. When the company follows conservative policy, liquidity is high, but profitability is low. Step 2. When the company follows moderate working capital policy, liquidity is normal, that means moderate, medium, and profitability is also medium. Step 3. When the company follows aggressive working capital management policy, the profitability is high, but the liquidity is low. Now you tell me, do you understand these 3 steps? Step 1, step 2, step 3, whatever I said, conclusions for case 1, case 2, case 3 separately. Do you understand? Yes, very good. Then overall conclusion, it is advisable to company to follow moderate policy because it achieves the objective of balancing between liquidity and profitability. This is how you need to write answers in the exam. Terminology is very important. Vocabulary is very important. Analysis is very important. For writing the answer, what is appearing on your screen, for writing answer, if you prepare this box in the exam, they'll give you 2 marks. But when you write step 1, step 2, step 3, and the conclusion, they'll give you another 2 marks. So for 4 marks question, student will say, sir, I wrote correct only, sir, but ICI has given only 2 marks, sir. Someone evaluated my paper who is not having children, who is not having wife, who is not having heart, no heart, sir, only stone, sir. Stone-hearted, cold-blooded idiot evaluated my paper, sir. No. My dear friend, try to understand, just for writing numbers, they'll not give you full marks. You ask them who got 90s in problematic papers. Who got 90s? They always write analysis, inference, discussion, conclusion after the table. Even, the same thing with capital budgeting as well. They'll ask you, calculate NPV and whether project can be accepted. This is the question. You calculated NPV. NPV is, say, for example, 225. Up to that you have written. After that. So for 4 marks, you will get 3 marks only, or you will get 2 marks only. Now you might say, but Pavan sir, I calculated. Better, there is a difference between how board exam sheets are evaluated and how ICI exam sheets are evaluated. You should understand that first. Okay, it is not like, a street cricket. From gully cricket, when you are going to play state level, from state level, when you are going to play national level game, from national level, when you are going to play international level game, rules will change. You need to understand. It is not, 3 wickets, 1 ball, 1 bat. No, you should understand rules of game. So when they ask you calculate NPV and whether the project can be accepted, no one writes correct answer. I'll tell you. See, NPV 225 you calculated. After that, conclusion. Desirability of the project. Under this, you'll write the net present value of the project is rupees 225 lakhs as calculated above. Okay. According to investment decision theories, a project can be accepted if it results in a positive NPV. This represents earnings above the cost of capital, which increases the value of shareholders or wealth of shareholders and achieve the overall objective of financial management. Therefore, project X can be accepted. Also, the company should consider other factors, including environmental damages and non-monetary factors. This is how you get 4 out of 4. This is how you get 90s in exams. Many students will ask, Pavan sir, how you got rank? Pavan sir, how you got, 80s and 90s in CA exams? Simple. We understand what is expected. We understand what is expected. So a person who is evaluating paper, what he expects out of me. So he thinks, hey, Pavan is not writing BCom examination in Madras University. Pavan is writing CA intermediate examination. So I expect more from Pavan. That is what the marker is thinking. The marker is the person who is evaluating your paper. So if I'm not meeting his expectation, it is my failure. You cannot blame ICI tomorrow. So like this answers should be. So always write this kind of, discussion, conclusion, inference, analysis. How much of time it takes? Maybe 30 seconds, maybe 1 minute. But that gives you another 2 marks, no? So if you spend 1 to 2 minutes more, And if you get 1 to 2 marks more, isn't it a nice, idea to spend? So for this problem also, if you are writing this answer out of 4 or 5, you'll get 2 marks. 50% of the marks you'll get for problem. Remaining 50% you'll get for analysis and conclusion. That is the reason whenever you see this RTP, or whenever you see the suggested answers, whenever you see the answers given in ICI study materials or old practice manuals you open, or any prescribed textbook of ICI, students will get irritated and students will ask, Pavan sir, after the problem, what is this Ramayana Mahabharata they are telling, Pavan sir? Are they mad? Have they lost it? Idiots, these many paras and why, Pavan sir? They are expecting you also to do that. So please try to develop the habit of writing theoretical understanding of your problem. This is global standard. Then only you'll get full marks. So are we done with question number 1? Shall we go to next question? If you understand question number 1 and how to present, because this is a revision class, I want to make you understand how answers are to be written in the exam also. That is very important. Okay, if you want me to go to next question, type next in the chat box, then we'll go to next question. Sabash. Put the heading operating cycle. Put the heading operating cycle. Under that, write down. See, I am sure you might have studied all these, what is operating cycle, or there are other synonyms also. Operating cycle is also known as working capital cycle, which is also known as cash cycle. Okay, so write down operating cycle. So we are not discussing theory straight. I am taking you to formula. Write down operating cycle is equal to, write down this, operating cycle is equal to R plus W plus F plus D minus C. Write this in your notes. Operating cycle is equal to R. What is R? Raw material storage period. Or we call it RMHP, raw material holding period. Same. Storage period or holding period is same. How long you store raw materials in your godown before consuming it? Simple. What is W? W is the processing cycle. So the moment I put materials in the machine, how long it takes for the output to come out of the machine? This is production time. Gestation period. Work in progress holding time. Okay, that is W. What is F? Finished goods holding period. Normally we call it inventory holding period, IHP. Unless otherwise mentioned, see, inventory includes raw material, work in progress, finished goods. But in ratio analysis, in working capital management, if someone is saying inventory, now student will ask, Pavan sir, in question they told inventory, but they did not mention whether it is a raw material, work in progress, or finished good, Pavan sir, what to do, Pavan sir? Simple. If nothing is mentioned, it is finished good. If nothing is mentioned, you can assume that it is finished. Okay, so what is finished good? What is F here in the equation? Finished good holding period or finished good storage period, which means the moment the finished good is manufactured in your factory and the moment it is sent to go down, how long it takes to sell the product. So it is the time period between completion of production and the sale of the good. For example, you take one mobile phone. This mobile phone is manufactured, say for example, today. Okay, the moment it is manufactured, next second it will not be sold, no? So the time gap between completion of production and sale of the good is called finished good holding period. Why? Because during this period, you are holding finished good. During this period, you are holding finished good. Then what is the debtors collection period? What is debtors collection period? Simple, credit period given to debtors. So your regular customer came and asking you, Anna, I want 100 units of, say, for example, raw material A. Le lo. Or finished good Y. Le lo, take. When will you pay? Pay after 30 days. That is DCP, debtors collection period. Then C is credit period allowed by suppliers. This is called creditors payment period, CPP. Okay, this is credit period availed by you when you are buying goods from your supplier. So to your customer, you are giving debtors, collection period, 30 days. From your supplier, you are getting some time. That is called supplier credit period. So basically, both of them are credit periods only. Credit period given by you to debtor is called debtor collection period. Credit period given by your supplier to you is called credit period by supplier. C, represented by C, supplier creditors payment period we call. Simple. Okay. So they have given you formula to calculate. Raw material storage period is equal to average stock of raw material divided by average cost of material consumption per day. What is this? Is this the formula you have studied, or maybe your teacher might have told you a different formula? Same, very good. Okay, now look here. So what is the formula? Average stock of raw material storage period. Raw material storage period, or we call it raw material holding period, is equal to average stock of raw material divided by average cost of raw material consumption per day. Okay, this is the formula they have given. Correct? This is the formula they have given. Okay, now let us simplify this. The denominator, first let us remove this average. Okay, don't consider average here. Can I say denominator is raw material consumption per day? So can I say it is nothing but annual consumption of raw materials divided by 365? So instead of this, can I write raw material consumed divided by 365? So do you think the content in yellow and the content in red are the same? So remove this from here, put this here. Now you look at this. This has become A by B by C. Raw material consumed divided by 360. So can I say A by B by C is equal to A by B into C? So can I remove this 365 from here? It is looking very odd. So what I do is I will put this into 365 here. So this is your formula. Simple. So basically raw material holding period is equal to average stock of raw material divided by raw material consumed into 365. So even in ICI material, whatever they have given is also same. But they prefer giving it theoretically, conceptually than, like a formula. That is the reason they have told so much of information there. But basically it is raw material by raw material consumed into 365. How we remember, in the class, raw material by raw material consumed into 365. Khatam. RM by RMC into 365. Okay, now there are so many points you need to keep in mind. Okay, basically they said average. Okay, average raw materials. This. So what is average raw material? Is equal to opening stock of raw material plus closing stock of raw material divided by 2. Correct? Average raw material is equal to opening stock of raw material plus closing stock of raw material by 2. If you have both opening stock in the question and closing stock in the question, add both divided by 2 and then take average in the numerator. In the absence of information, Pavan sir, information is inadequate, then take closing in the numerator. No problem. You understand? If information is available, we calculate average. If information is not available, you take closing in the numerator. Pavan sir, how can I take closing? Simple. You are assuming that opening stock, closing stock are same. When opening stock and closing stock are same, imagine opening stock is 100 rupees. Closing stock is 100 rupees. What is average stock? 100 plus 100 by 2. Take calculator and calculate, idiot. 100 only will come. Okay, so what did I say? If both opening stock and closing stock are given, calculate average stock. If opening stock is not given, then take closing stock as average stock. Why? Because if we assume that the opening stock and closing stock are same, then closing stock will be equal to average stock. Oh my God. Pavan sir, FM is very easy, Pavan sir. Yeah, I know. If you do not understand, you will complicate it. Now student will ask in one question, they said average, but they took a closing stock. Why, Pavan sir? The person who wrote this solution is idiot, Pavan sir. He is not having a brain, Pavan sir. No, it is not that he is not having brain. It is that he has brain. He assumed that opening stock and closing stock are same. That is the reason he knows that closing stock and average stock are same. But the problem is he did not tell you that this is what he assumed. Okay, so that's all. So this is about raw material. Now, once you understand first equation, everything is easy. Raw material, take raw material consumption. For work in progress, either you can take cost of production or. Pavan sir, I don't think we should consider cost of production for work in progress. More accurate measurement is dash. More accurate measurement for work in progress is dash. You tell me. I don't know. Excellent. Bino, correct answer. Works cost. So you have to take average work in progress divided by works cost into 365. If works cost is not there, then you can take cost of production also. Finished goods. Average stock of finished goods divided by cost of goods sold, COGS, into 365. Debtors. Average debtors divided by credit sales into 365. Creditors, credit period. See, average creditors divided by credit purchases into 365. Simple. So step 1, you need to calculate 1, 2, 3, 4, 5. Then calculate operating cycle. How do you calculate operating cycle? R plus W plus F plus D minus C. That's all. Shall we do one problem on this? Hello. Hello, hello, hello. Super. So Aishwarya, read the question, ma. There are around 140, 150 students in the class, so I cannot interact with all. I'm so sorry for that. So I'm interacting only 1 or 2 students, okay?
Yes, sir.
Akka, read.
From the following information of XYZ Limited, you are required to calculate net operating cycle period Number of operating cycles in a year.
Hey, what is net operating cycle period, ma? Gross operating cycle means R plus W plus F plus D. Only current assets. Gross means only current assets. Net means current assets.
Minus
Current liability. So when you subtract C, it becomes net operating cycle. R plus W plus F plus D, gross operating cycle, minus C, net operating cycle. Is this clear?
Yes, sir.
Okay, continue.
Raw material inventory consumed during the year 6 lakhs. Average stock of raw material 50,000.
Hello, madam. Wait, I have one more doubt, madam. How do you calculate number of operating cycles?
365 divided by operating cycle.
Super, very good. 365 divided by, correct. So tell me one thing, shall I take 365 or 360?
Sir, particularly if we take 365, this will consume like subtraction problem, sir. Round off problem will arise, sir.
Correct. So what should I take? Shall I take 365 or 360? Did you observe in ICI book, some problems are 365, some problems are 360?
Yes, sir.
But in formula, they always give 365.
Yes,
in
sir.
formula, they never give 360. So simple. Read the question carefully. If this line is there, then take 360.
Okay.
If this line is not there, even then you can take 360, but you need to write a
assumption note.
Note. Very good. So note is like, writing these notes and assumptions is like a love letter. Okay. So the student is writing a love letter to the person evaluating your paper. So love letter is a good vibe or bad vibe?
Good.
Good vibe. Very good. Your generation do not know. Maybe probably my generation. I do not know, but my generation knows. So always write a note.
Okay, sir.
Read.
Yeah. Raw material inventory consumed during the year 6 lakhs. Average stock of raw material 50,000. Work in progress inventory 5 lakhs.
Hello. Wait, madam. All of you, can you read these two lines and tell me what is R?
Raw material holding period.
Ray, rubber manda, calculate and tell me. I remember I asked once, a student, Ray, what is EPS? He told EPS, earnings per share. Then I said, EPS is earning per share. I also know in this question, what is EPS? Idiot, calculate and tell. Then he's like, 30 days. Excellent. So guys, all of you got raw material, 30 days raw material holding period. Very good. So read the next two lines, ma. Okay, unmute. Read.
Yes, sir. Work in progress inventory 5 lakhs. Average work in progress inventory 30,000.
No. Wait. I think something is wrong. There is some printing mistake. It cannot be like this. Do they think 5 lakhs is works cost? Let us check the answer. Yeah, 5 lakhs they have taken as works cost or cost of production. Okay, so this 5 lakhs, no, it is not work in progress inventory. It is works cost, or you can take COP, cost of production. So please make a note. If you have textbook in your hand, strike off this work in progress inventory. This 5 lakhs is not work in progress inventory. This 5 lakhs is cost of production, or you can assume that as works cost. Okay, so guys, look at these two numbers. Can you calculate and tell me what is W? Guys, can you calculate W, please? 22. Very good. Continue, ma. Again, I need to unmute. Read.
Cost of goods sold during the year 8 lakhs.
Uh,
Average finished goods stock held 40,000.
Now calculate for this also. Next, you continue. Read, ma.
Yes, sir. Average collection period from debtors 45 days. Average credit period availed 30 days. Number of days in a year 360 days.
Super. So they have given you one favor by giving this days. They could have asked this too also. They could have given debtors, they could have given sales, they could have given creditors, they could have given credit purchases, and then they could have asked you to calculate this 45-30. But they thought, okay, our kids only, no? Chalo, let them solve half problem, remaining half problem. So can I say R is equal to, in this question, R W F D C. Okay, so R is 30, this is 22, this is 18, D is already given 45, and C is 30. So can you calculate operating cycle and tell me, hello, 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 everybody. Tadan, tadan, tadan. Is it 85? Then number of operating cycles in a year is equal to 360 divided by operating cycle. So can you calculate, tell me how many operating cycles are there? Can you calculate and tell me how many operating cycles are there? Excellent, 4.23. So can I say it is 360 divided by this, 4.23, or you can write 4.24, either ways. Okay, now in the exam, how to write, I'll tell you. Here you will write component of working capital. Excuse me. Here you write ratio. Here you write workings. Here you write days. Component, raw material holding period. Then you write the formula is equal to average stock of raw materials divided by raw material consumption per day. Then you will do the workings. You will show them that it is 50,000 divided by 6 lakhs into 360. Then you will write 30 days here. If you do not write in this pro forma, you will not get marks. You need to show them what is the component. You need to show them the ratio. You need to show them the working. Then you need to show them that 30 days. Otherwise, they will ask you, where you got this 30, idiot? So you need to show in this pro forma. Okay. So guys, do you understand this problem? Are we done with question number 2? Can we go to question number 3? Hello, can we go to question number 3? Yes, question number 3 is calculation of working capital, or we call it working capital forecast. Calculation of working capital, or we call it working capital forecast. Using CA minus kill. What is CA? Current assets. It is kill current liability. So basically, what do? We prepare a table. We start with current assets. Under that, we write each and every component of the current asset. We calculate how much it is. We put in the amount column, add all the current assets. We call it gross working capital. Then put the heading current liabilities. Add all the current liabilities one by one, mention them, calculate workings, and then put it in the total column. Add all the current liabilities, subtract this from current assets. That is what we call net working capital. Okay, so do you remember the pro forma? Take current assets, under that particulars, ratio, then workings, then amount, gross working capital, under that net working capital. So shall we see that problem? Hello, hello. Okay. So we got the correct answer. This 85 days and 4.23. Yes. Why we got correct answer? Because I calculated. Sorry, even if we calculate, that will come correct only, sir. Okay, what is this? Raw material inventory is equal to what equation they have given? So if we solve this equation using this, can we go along with Elon Musk to Mars or Jupiter? Sometimes ICI complicates formula. Okay, estimated production units divided by 12 months divided by 365 days into estimated cost per unit into average raw material storage period. Pavan sir, what they wanted to tell you? Pavan sir, the Three Idiots movie is there, no? भाई तुम क्या कहना चाहते हो? What do you want to tell? Don't worry about this formula and all. I'll tell you how to calculate. कहना क्या चाहते हो is not required. Don't worry, I'll take you through all this formula. Okay. So straight we'll go to question. Straight we'll go to question. Where is question number 3? Yep. Note this as very, very, very important model. This model, I cannot even tell you how many times this is given in the exam. Okay. Maybe 10 times, 20 times possible. Classic model, exhaustive model. So let us take the help of our Akka. Akka, read it, please.
On 1st January, the Managing Director of Narine Limited wishes to know the amount of working capital that will be required during the year. From the following information, prepare the working capital requirements forecast. Production during the previous year was 60,000 units. It is planned that this level of activity would be maintained during the present year. The expected ratios of the cost to selling prices are raw material 60%, direct wages 10%, and overhead 20%. Raw materials are expected to remain in store for an average of 2 months before issue to production. Each unit is expected to be processed for 1 month, the raw material being fed into the pipeline immediately and the labor and overhead cost accruing evenly during the month. Finished goods will stay in the warehouse awaiting dispatch to customers for approximately 3 months. Credit allowed by creditors is 2 months from the date of delivery of raw materials. Credit allowed to debtors is 3 months from the date of dispatch. Selling price is 5 per unit. There is a regular production and sales cycle. Wages and overheads are paid on the first of each month for the previous month. The company normally keeps cash in hand to the extent of 20,000.
Super. Thank you, Mom. So this is a very interesting question. So how many units are produced in the last year? 60,000. How many units are going to be produced for the current period? It is planned that the same level of activity would be maintained. That means I will take 60,000 only. But in the question, if they say production during the previous year was 60,000, the company is expecting an increase of 25% of sales in the future. Then you will take 60,000 plus 25%. You understand? But they did not mention anything. So we'll take only 60,000. Now, guys, what is the selling price? 5 per unit. What is the selling price? 5 per unit. In 5 rupees, raw material is 60%. Oh my God. Can you do this super natural, super duper calculation and tell me what will be raw material cost? 60% of 5. Take calculator. Calculator, take it, tikku. Then it will be 3 rupees. What will be direct wages? Hello. What will be direct wages? Calculate and tell me, Ray. 5 rupees into 10%, 50 paise, 0.5, correct. Okay, so what will be overheads? 1 rupee, correct. What will be profit? Sir, they have not given any profit percentage, sir. How can we tell profit, sir? Array, idiots, out of sales, if 60% is raw material, 10% is direct waste, 20% is overhead. This is total cost. No, if you subtract total cost, the balance is profit only, 0.5. So can I prepare a working note? Working note 1, cost sheet. Or we write cost structure, or you can write income statement, or you can write cost sheet, anything is same. So you write particulars. Then I write per unit. Then I write total for 60,000 units. Then I write raw material. Then I write wages. Then I write overheads. Then I write total cost. Then I write profit. Then I write sales. This is 5 rupees, or you can write percentages also if you want. No, Pavan sir, I want to write more detailed. Okay, very good. Percentage of selling price. So write this as 60%, write this as 10%, write this as 20%, write this as 90%, write this as 10%, write this as 100%. Okay, then write here 3 rupees, 0.5, 1. What is total cost? 4.5, 0.5. Okay, now can you multiply this and tell me? So total raw material consumed is 1,80,000. Can you tell me what is total wages? For 1 unit, to produce 1 unit, you have to pay 50 paise, 0.5 rupees. But you are producing 60,000, no? So for 60,000 units, how much of wages are to be paid? Isn't it 30,000? I want you to fill this yellow, dirty fellow. Yeah, fill all this for. Fill all this for yourself. Complete the table. Sir, we are doing so much of hard work, writing, calculating, telling the answer. This side Zoom, your motta face, this side calculator, this side chat box. What you are doing? Simply sitting and having tea, coffee, sir. So this is your working note 1. Okay. Now I'll write some nonsense on the board. You have to tell what it is. Okay. What is this? $3.75. For what I'm going to use this 3.75? Can anyone tell me? Sharif is giving the correct answer. Manish, there is no concept of cash cost in this question. We are following only total approach. We have not yet reached cash cost approach. This is not cash cost. This is work in progress. For work in progress, we take 100% of raw materials and 50% of wages and overheads. That is a standard assumption. Why that assumption is, there is theory behind that also, but it is a standard assumption. Unless otherwise mentioned, always consider 100% of raw materials, 50% of wages and overheads in work in progress. So this green color thing, what is that? This red color thing, what is this? Yellow color thing, what is this? So now you tell me, start with green. For what we are going to use green? To calculate raw materials and creditors. For what we are going to use this red? Green is for raw material creditor, 2. Raw material creditor. Red is also for 2. Oh my God. One is finished goods. Second one is debtors. Very good. Debtors are also to be calculated on total cost. No, debtors cannot be calculated on sales. Hello. Wait. Is there any student in the class who's simultaneously preparing for CMA also? Some idiot mad people will be there like me, doing both CA and CWA. Or maybe CA and ACCA. Please keep it in mind, the way how we solve the same problem for CA and same problem for CMA, it is different. Those who are also studying cost accountancy, that means CMA course, please be careful. In CMA study material, if you look at, it is given in chapter 10. If you are doing CMA, debtors are calculated on sales, always. Riyas is saying he is doing CMA. Yeah. So if you are doing CMA, please be careful. Debtors are calculated on sales in CMA. In chartered accountancy textbooks, debtors are calculated on total cost. So you can write it here, note. Debtors are calculated on total cost. Khatam. Debtors are calculated on total cost. It is, see, someone is asking why, sir? See, there is no standard or regulatory control or legal requirement for this. Okay. So this financial management or costing, whatever we are discussing, of course, at least for costing, there are cost accounting standards. When you are doing financial management or management accounting, it is for internal purpose. So different companies, different industries, different countries may follow different ways of calculating something. For example, how we see, I teach CMA US, I teach CPA, I teach ACCA. I have personally done my master's from one of the European universities. So if you look at how they calculate debt equity ratio, can you believe in the United States, debt equity ratio, while calculating debt equity ratio, they'll include current liabilities also. You understand? Debt equity ratio we calculate. Now, how we calculate debt equity ratio? Debt by equity. Correct? What is debt? For us, it is only long-term debt. But if you are doing, US CMA or US CPA, you'll include current liabilities also. For them, debt is equal to total debt, like long-term debt plus current liability. So there are different, approaches. We cannot say this is right, that is wrong. But you need to understand, when you are writing one specific professional body exam, how to write in your exam, you need to be aware of. Okay, so write down, note, debtors are calculated on total sales. Sorry, debtors are calculated on total cost. Total sales for CMA students. For CA students, it is, I was having CMA class few days back for Kolkata. That means for the head office all over India, I have taken. Okay. So for CA students, debtors are calculated on total cost. If you follow cash cost approach, debtors will be calculated based on total cash cost. So basically this red is for two things. Finished goods and debtors. Yellow is for, hello. Yellow is for, yellow is for what? Work in progress, correct. So shall we continue? Put the heading working capital forecast. In brackets, total approach. There are two approaches. One is called total approach. One is called cash cost approach. Cash cost approach. Next problem. Total approach, this problem. If you understand both total approach and cash cost approach, the chapter is over. Fifth question, they have given effect of double shift. If the factory is working on two shifts, how the working capital is to be calculated. That is last question. But before that itself, we are completing the chapter. If you understand how working capital is to be forecasted based on total approach and based on cash cost approach, you are done with the topic. So put the heading working capital forecast. Under that particulars, under that A, current assets. A, current assets. Here we put particulars. You don't need to write formula here because already the calculations will be more. So you can skip formula here. You can write workings and you can write amount rupees. Particulars, workings, amount rupees. Okay. Under that, current assets. Under current assets, 1. Raw materials. Raw materials. Okay. Now, do you remember they have given you one big formula? Number of units produced into raw material cost per unit into something divided by something into your head square root of my tail. Okay. What they told, I'll tell you here. How many units you produced? 60,000 units. What is raw material cost per unit? 3. So what is total raw material consumed? 1,80,000. But what is the amount of raw material in your hand? Are you holding 1,80,000 worth raw materials? No. 1,80,000 worth raw materials are the raw materials for full year. For example, you go and ask your mom, how much of rice we consume a day? She said 1 kg. For full year, how much we consume? She said maybe approx 350, 360 kgs. But do you think 350 kgs will be there in your kitchen? Your annual consumption is 350 kgs. Your annual consumption is 350 kgs. But will you hold 350 kgs in your hand? No. So my annual consumption is 1,80,000, but I will not hold 1,80,000 worth raw materials in my godown. In the question they mentioned, oh my God, raw materials are expected to remain in store for 2 months only. But I know that this is for 12 months. If this is for 12 months, how much of the raw material will be there in my hand for 2 months? 2 by 12. Calculate and tell me how much it is. 30,000. That's all. Correct answer. 2. What is second one? Work in progress. take 60,000 into, can anyone tell me how much I should take here? 60,000 into how much I should take? Hello, hello, hello. Excellent, 3.75. Now you understand why I have written that 3.75 in the working note itself. So don't you think if working notes is proper, life is happy? Even when you're doing problem in amalgamation, consolidated financial statements, or investment accounting, if your notes are clear, your final answer will be very easy. Now look at production cycle. Each unit is expected to be in process for 1 month. So can I take 1 month here? So can you calculate and tell me how much I need to write here? Correct, 18,750. 3, can I write finished goods? In the exam, don't use these kind of WIP, FG, WC. No, that is informal. You are expected to be obedient, submissive, humble, formal, pleasing. So you cannot write WC. If you write WC, the person who's evaluating your paper will get a doubt. What is this WC? Is it telling Western commode? No, sorry, 0. We don't want Western commode people here. Work in progress, you can use WIP sometimes because this abbreviation is used in ICI book also. Simple. Pavan sir, which abbreviation can I use? Can I use EPS? Yes. Can I use DR for debit? Yes. Can I use WIP? Yes. Because simple, follow simple logic. If this abbreviation is used in ICI study material, you can use it in exam. But I have never seen FG in ICI books. So you're not supposed to write it. I have never seen WC for working capital. I have never seen MPS for market price of share. I have never seen D for debt. I have never seen COGS. Maybe sometimes they use, but majority of times they write completely. They will not use COP, cost of production. No, COP for them is certificate of practice. I see. So don't use. Now, can you tell me calculations here? Or if you have already calculated, I'll be happy to write the answer here. Let me see if someone has already completed it. Sir, you speak nonsense, but we are calculating. We are nice students, sir. Very nice students. Arya is saying 67,500. Correct. Can I put 67,500 here? Okay. If someone is not understanding how 67,500 came, what to do? Is there any answer for that? Sir, I did not understand how 67,500 came, sir. What to do, sir? Please tell me, sir. Go to 7th floor. No. 60,000 into 4.5 into what is 4.5 total cost per unit? Finished goods, 3 months period is given into 3/12. That's all. Okay. Now tell me 4 debtors. Same calculation, same answer. Okay. Do we have any other current asset? Hello. Cash is given in the question. Can someone help me with cash? I forgot whether cash is 20,000 or given or no. Please tell me. 20,000, correct. So what is this? Gross working capital. Gross working capital. Ta-da! Is it 203,750? Gross working capital, is it 203,750? Yes. What to do now? Are we done with this question? Can we go to next question? Ray, tell, can we go to next question? Ray. Who will calculate current liabilities? Ray, people are saying yes, sir. Can we go to next question? No. Current liabilities, who will calculate? Sir, we'll do one thing, sir. Current assets I calculate, sir. Current liabilities my grandmother will calculate, sir. Sir, how is this arrangement, sir? Did you like it, sir? Current asset you have to calculate. Current liability also you only have to calculate, not your grandmother. So I have put A here, current asset. Now, so B, current liability. Under that one, what current liabilities they have? Creditors for goods. Okay, 60,000. 60,000 units you purchased at 3 rupees, no? Correct. What is the credit period allowed by creditors? Here. 2 months. Into 2 by 12. Can you calculate again? People will take calculator. Idiot, already same calculation is there here, no? 30,000. Do we have any, other current liabilities? Yes. Wages and overheads are paid on the first of each month for the previous month. That means you are paying it after 1 month, not technically. So March wages, you are paying on April 1st. September wages, you are paying on October 1st. So 1 month credit period is there. Creditors for expenses, or you can write outstanding wages. You can write creditors for expenses, creditors for wages, creditors for overheads you can write, or you can write outstanding wages, outstanding expenses. How much is wages? Total wages 30,000. In the calculation, total wages 30,000. Hello? Total wages 30,000. That you are paying after 1 month. So 30,000 into 1 by 2. 1 by 12, not 1 by 2, 1 by 12. How much is it? 2,500? Sir, you forgot putting one more zero, sir. You said 3,000. No, it is 30,000. 2,500. Now, I don't know calculation. I lost my mind. Can you please fill this yellow dirty fellow? Correct. 5,000. How? 60,000 into 1 by 12. 5,000. Total current liabilities. Total current liabilities. How much? 37,500. Therefore, net working capital is CA minus CL. Hello, tell me, can someone tell me what is net working capital in this question? Tan, 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 tada, tada, tada. This question can come for 6 marks. If your luck is good, 8 marks. So, what is the answer? Hello, did we get the correct answer? Oh my God. Correct answer. Now, public poll, general knowledge question. If this question is given for 6 marks, how many marks you will get? Six out of 6. Excellent. Someone is asking, sir, how 1 month in expenses? They have given Nama in the question they gave. In the question, they gave here, na? See, wages and overheads are paid first month of the next month, first of the next month. That means 1 month credit period. So can we go to last question of the day, which is cash cost model. Today we will do working capital. Tomorrow we'll do debtors management, and time permits cash management. And I'll explain factoring also. Okay. So if you are done with this question and if you want me to go to next question, type next in the chat box. Then we'll do cash cost model. Okay. Put the heading cash cost approach in working capital forecast. Ta-da, ta-da, ta-da. Cash cost approach in working capital forecast. Okay, now working capital refers to the fund required. What is working capital? Working capital refers to the fund required to pay short-term liabilities, operating expenses, and bills. What is this? Working capital refers to the fund required to pay short-term liabilities, operating expenses, and bills. That means you need to exclude two things from here. You need to exclude two things from here. One is non-cash expenses. For example, if you go to this particular calculation, what is technically wrong here? I'll tell you. This 60,000 is there, no? This 60,000 is overheads. Maybe this includes depreciation. Obviously, depreciation is overhead, no? But when you are calculating working capital based on 60,000, conceptually it is wrong. Pavan sir, you have taken outstanding expenses 60,000 into 1/12, correct? Yes. But what if, Pavan sir, out of this expenses, out of this overheads, 60,000, if 20,000 is depreciation. So total overheads, 60,000. In this, depreciation is 20,000. Cash expenses, 40,000. You tell me, while calculating working capital, will you take 60,000 or will you take 40,000? You tell me. I don't know. When I was shaving hair, I lost one part of brain also. So I don't know. You tell me. Shall I take 40,000 or shall I calculate working capital based on 60,000? Do I need to pay 60,000 to outsiders or do I need to pay only 40,000 to outsiders? So if my expenses are 60,000, if my overheads are 60,000, and if my depreciation in that is 20,000, do I need to pay 60,000 to outsiders? The answer is no. No. So logically, it is appropriate to take 40,000 while calculating working capital, isn't it? This is called cash cost approach. Simple. People think cash cost approach is a very difficult concept. No, cash cost approach is a simple concept. So here what we do is, since depreciation is a non-cash item, and since depreciation need not be paid to any outsider, working capital need not be maintained for a depreciation component. Pavan sir, rent I need to pay to outsider. Pavan sir, taxes I need to pay to outsider. Pavan sir, other administrative expenses I need to pay to outsider. Pavan sir, petrol expenses I need to pay. Maintain working capital for what you need to pay. So working capital need not be maintained for depreciation. Therefore, can I say exclude depreciation while calculating working capital? That's all. This is called cash cost approach. Exclude depreciation. This is called cash cost approach. Another thing to be excluded is profit. Profit. So if you look at this particular table, this 0.5 is there now. Do I need to maintain this working capital for this 30,000 component? No, not required, because that is going to be my profit. You understand? So working capital is required for this 2,70,000, not for this 3 lakhs. So simple cash cost approach says, eliminate profit, eliminate depreciation. You understand? Cash cost approach says eliminate depreciation, eliminate profit while calculating working capital. Khatam. There is nothing, no nuclear science, nothing beyond this. Now I'll tell you the easiest way to solve a problem. Easiest way. I'll give you one proforma. Okay, this proforma is going to be your Bible. This proforma is going to be your Quran. This proforma is going to be your Bhagavad Gita. Remember this proforma, you can solve any problem. Particulars. Take raw materials, wages, cash expenses in overheads. Don't take total overheads, only cash expenses. Take raw materials, take wages, take cash expenses. Add these three. You will get cash cost of production. Admin overheads, only cash cost. Admin overheads, cash expenses. Marketing overheads, or you can call selling and distribution overheads. Marketing, or you can call selling and distribution overheads. Only cash expense. Add these two, you will get, this is cash cost of production. This is total cash cost. That's all. So these are production overheads. So these are production overheads, cash expenses. Production overheads, cash expenses. So from all the overheads, eliminate depreciation. Can there be depreciation in production overheads? Yes. Can there be depreciation in admin overheads? Yes. Can there be depreciation in selling and distribution overheads? Yes. Maybe in FM, this kind of problems will not come, but in costing, it can come. In costing, it can come. For example, you tell me depreciation on machinery, depreciation on factory building, depreciation on corporate office building, depreciation on delivery van, depreciation on sales showroom building. You tell me what overhead it is. What overhead it is, you tell. I don't know. I forgot. Production overhead, correct. This production overhead. This is also production overhead. What about this? Corporation office. Administrative buildings, corporate office. This is selling overhead. No, admin overhead. What about depreciation on delivery van? Selling and distribution overhead. Selling and distribution overhead. So simple. Basically, Depreciation can be there in production overhead or admin overhead or selling and distribution. Wherever it is, eliminate kar do, remove it. That's all. Wherever it is, remove it. But normally in financial management, we'll not have all these types of depreciation. We'll have only one line item, depreciation. We assume that it is depreciation on machinery or factory, so we consider it here. That's all. So this will be used for finished goods. This will be used for debtors. Khatam. The problem is over. Okay, this is one working note you'll prepare. If you are doing problem on cash cost approach. So shall we quickly look into one problem? Shall we see one cash cost approach problem? Problem number 4. This is also very important model. Repeatedly asked in the exam. Repeatedly asked in the exam. Okay. So Aishwarya, can you read it, ma?
The following annual figures relate to XYZ and Co. Sales at 2 months credit 36 lakhs. Materials consumed.
Sales is 36 lakhs. Credit period is 2 months. Can you calculate debtors? Sales is given 36 lakhs. Debtors credit is 2 months period. Can you calculate and tell me debtors? Guys, please do that fast and tell me in the chat box.
6 lakhs.
No response from people. Okay, everybody is saying 6 lakhs, 6 lakhs, 6 lakhs. Okay, now tell me, Aishwarya, is 6 lakhs correct or wrong?
Correct.
No, wrong. Why it is wrong?
Because debtors calculated on cost, it is sales.
Yes. If you are doing calculation of debtors based on 36 lakhs, it is selling price approach. Neither total cost approach nor cash cost approach. But we have to follow cash cost approach in this problem. So don't calculate debtors based on 36 lakhs. We'll prepare working notes for that. Okay.
Yes,
Continue.
Material consumed. Suppliers extend 2 months credit.
9 lakhs. So some students will do a mistake here also. Material consumed 9 lakhs. 2 months credit period they take. 9 lakhs into 2 by 12. Hello, wait. If you calculate 9 lakhs into 2 by 12, you are calculating creditors. You are not calculating materials. It is a trap. Raw materials. Take 9 lakhs. Take 2 months. We get to bold. This is supplier credit period. This is not raw material holding period. If you are taking 9 lakhs into 2 by 12, you are calculating creditors for goods. How to calculate materials? You need to take 9 lakhs and you need to take raw material holding period. Somewhere in the problem, it will be given. Next, read the next one, ma. Next line.
Wages paid 1 month lag in payment 7,20,000.
So 7,20,000 into 1 by 12. That is outstanding wages. Continue. Next.
Cash manufacturing expenses. Expenses are paid 1 month in arrear.
So can you tell me what is outstanding cash manufacturing expenses?
$80,000.
Can I say 9,60,000 into 1 by 12?
Yes, sir.
Correct. 80,000. Next, admin expenses. 1 month lag in payment. So total 2 lakhs.
Administrative expense. 1,000.
So tell me, monthly how much? How much is outstanding?
20,000.
Outstanding is 20,000. Okay, next. Continue.
Sales promotion expenses paid quarterly in advance. 1,20,000.
So
Current asset.
current asset. Very good. Because this is paid in advance, it is current asset. How much can you tell me?
Yes, sir.
How much?
30,000.
30,000 or 40,000? 30,000 is correct answer, but many students
Yes, sir.
will say
4
40,000.
quarters.
That's all. Next, continue.
The company sells its product on gross profit of 25%. Depreciation is considered as a part of cost of production. It keeps 1 month stock each of raw materials and finished goods and a cash balance of 1 lakh. Assuming a 20% safety margin, compute the working capital requirements of the company on cash cost basis. Ignore work in progress.
Very good. For the time being, ignore this sentence. For the time being, ignore this sentence. That is not useful in the question. At the end of the problem, I'll tell you what to do with this. So raw material holding period, basically 1 month. Finished good holding period, 1 month. Work in progress, not there. Ignore work in progress. Cash given 1 lakh. Simple problem. Shall we start solving this problem? Yes. So put the heading, calculation of cash cost. Particulars, amount rupees. Raw materials, wages, production overheads, only cash portion, cash cost of production, admin expenses, selling and distribution expenses, total cash cost. Raw materials, check out the question. What is total raw materials? 9 lakhs. I'll take 9 lakhs here. What is total wages? 7,20,000. What is production overheads? Cash manufacturing expenses. That means they're saying this 9,60,000 is cash portion only. Okay. If it is total overhead, then I would have subtracted depreciation, but they have given cash manufacturing expenses. 9,60,000. Can someone calculate this 3 and tell me what is cash cost of production? This blue color cell, how much I should write? Can you calculate and tell me in this blue color cell, how much I should write? Sahira is giving the answer. What about others? Hello. $150 students will be there. 15 answers are also not coming. Remaining people, eat, sleep, repeat. Okay. So how much is admin expenses? 240. Sales 120. 2,40,000. 1,20,000. Now tell me how much this is. Correct. Super. $29,40,000. Correct. Okay. Now working capital forecast. In brackets, cash cost approach. Particulars, workings, amount rupees. Under that, A, current assets. Under that one, raw materials. Okay. Now tell me, what is raw material holding period? 1 month. What is raw material given in the question? 9 lakhs. So can you calculate 9 lakhs into 1 by 12? How much? 75,000. Correct. Then 2, work in progress is not there. They have specifically mentioned in question, ignore work in progress. There is no work in progress. Therefore, 2, finished goods. Can someone tell me how should I calculate finished goods here? Finished goods 1 month I know, but how should I calculate? On what should I apply that 1 month? Very good. Very good, Saira. Correct. What about others? Based on cash cost of production, 25 lakh 80,000, which is already there in your working note. 25 lakhs 80,000 into 1 by 2. How much it is? Is it 2 lakhs 15,000? Correct. 3, debtors. Okay. What is debtors period? 2 months. Sales are done at 2 months credit. Sales are done at 2 months credit. Correct. So debtors are to be calculated on total cash cost, 29 lakhs 40,000. So I'll take 29 lakhs 40,000 into 2 by 12. How much it is? Can someone tell me? Vishnu is saying 490. Shamad is saying, Sahira is saying 490. I don't know. Oh my God. Bill Gates is also saying 4 lakh 90. Amazing people. So you calculated it faster than MS Excel. Wow. Do we have any other current assets? Hello, hello, hello. Do we have any other current assets? So people are saying cash. Okay, I'll write cash also given 1 lakh. Do we have any other current asset? Think. Do we have any other current asset? Any prepaid expenses? Yeah. Sales promotion. 5. Prepaid. Correct. How much? 1,20,000 annually, paid quarterly in advance. Now I want you to calculate gross working capital. Gross working capital. How many of you got 9,10,000? Correct answer. Yes. B, current liabilities. In current liabilities, we have first creditor for goods. Creditors for goods. Now look here. 9 lakhs is the total material. Suppliers have given you 2 months credit. 9 lakhs into 2 by 12. How much it is? Should be 1,50,000. 2. Okay. Wages. 1 month lag in payment. 7,20,000 into 1 by 12. Wages how much? 7,20,000 into 1 by 12. 60,000. Any other we have? Manufacturing expenses paid 1 month in arrears. So total 9,60,000 into 1 by 12. How much is it? 80,000. Then anything else? Yes, we have outstanding admin expenses also. So let me put outstanding here. Otherwise, you'll get heart attack. Outstanding manufacturing. Then outstanding admin expenses. 2,40,000 into 1 month. How much? 20,000. Correct. Total current liabilities. Tadan, tadan, tadan. Keshav is asking how that creditor amount came. Ray. Materials consumed 9 lakhs. Suppliers have given 2 months credit. 9 lakhs into 2 by 12. That's all. In that, if you have doubt what to do. Okay, total current liabilities 3 lakhs 10,000. Now tell me net working capital how much? Net working capital 9 lakh 10,000 minus 3 lakhs 10,000. 6 lakhs. Do you think the problem is over? No. The problem is not over because they asked you to maintain margin of safety. Oh my God. So add margin of safety. 20%. So what is safety margin? Not margin of safety, safety margin. Simple. You know that, see, it is something like you are going for buying some provisions. You know that approx it will be 4,000 rupees. But will you go exactly with 4,000 in your pocket? No. For some unforeseen contingencies, you'll have, little more money. You know that you will go to market and you will spend 4,000, but probably you'll take 200, 300 or 500 excess in your pocket. That is what we call safety margin. So the company knows that they need a working capital of 6 lakhs, but they don't want to take risk. They're like, Pavan sir, we know that we need 6 lakhs, but we'll keep little more money, Pavan sir. Okay. How much more money? 20%. So how much it is? 1,20,000. So what is the total working capital required? Including safety margin. That's all. This problem is over. Now, we'll go back to one sentence. What is this, Pavan sir? Okay. Now, tell me, what is sales given in the question? 36 lakhs. Less. What is gross profit ratio given? 25%. So can you calculate, tell me 25% on 36 lakhs, how much? $27 lakhs. Ray. 25% is 9 lakhs only now. So you are subtracting that and telling already. So what is cost of goods sold? 27 lakhs. You call it cost of goods sold, you call it cost of production, as the case may be. In some questions you can call it cost of goods sold, in some questions you can calculate, you can say cost of production. Okay. So basically, cost of goods sold is nothing but cost before admin and selling expenses. Basically, this is cost before admin and selling expenses. When you say cost of goods sold, what do you mean? When you say cost of production, what do you mean? Before admin and selling expenses, this is the cost. So here 27 lakhs is the cost. But somewhere I got 25 lakh 80,000 only. But in some other calculation, they are saying 27 lakhs. So 27 lakhs is cost of production. 25 lakh 80,000 is cash cost of production. Cost of production, cash cost of production. Cost of production, cash cost of production. What is the difference between these two? Depreciation. So depreciation is 1,20,000. That's all, ladies and gentlemen. In this question, if they ask you also calculate hidden depreciation, then you would have done it like this. Sales, 36 lakhs, less gross profit, 25%, 9 lakhs. Cost of production, 27 lakhs. Cash cost of production, 25 lakh 80,000. Therefore, depreciation, 1 lakh 20,000. If they ask you to calculate depreciation, this is what we do. If they do not ask you to calculate depreciation, this sentence is not required. This is just a trap to confuse you. This is just a trap to confuse you. Student will get, sir, depreciation, how to do, sir? Array, in the question, they gave you cash manufacturing expenses. So you don't need to do anything. So this sentence is a trap. But the sentence is useful had it been, asked in the question to calculate depreciation. That's all. This problem is over. So what is our answer? 7,20,000. So did they get 7,20,000? Yes. So did they get 6 lakhs, 9,10,000 gross working capital? Correct. They got 3,10,000? Correct. They got 6 lakhs? Correct. 1,20,000? Correct. 7,20,000? Correct. That's all. That's all. So guys, do you understand this question? All of you? So with this, can I say calculation of working capital based on operating cycle is over? Calculation of working capital based on total approach is over? Calculation of working capital based on cash cost approach is over? Isn't it?